pleasure to be here and see you. It's a special day actually, because exactly 20 years ago, 2004, I came into my first hotel investment conference, and it was precisely here at the Marinos. At that time it was called AHIC, and it's amazing to see how this conference has evolved to become the Future Hospitality Summit, and that we are including other regions now into it as well. To me that makes perfect sense, because as we know, the money from the Middle East has always loved Europe. So I think it's good that we're actually having separate sessions on this, and we're going to be giving you 2 sessions. So first in the mature markets, and then straight into the resort markets to see how the investments are looking. So allow me to welcome our first group. We have Marinos Giannopoulos, CEO from Enterprise Greece. We have Dr. Peter Ebertz, Managing Director, Head of Hotels from Art Invest Real Estate Management. I will be referring to him as Peter after this. And Benjamin Habbel, Managing Partner and Co-founder from Limestone Capital. Thank you. So you've obviously all just flown in from Europe, am I right?
That's correct.
That's correct, yes.
Nice red eye.
Yes.
Yes, okay. Now we saw from Larissa's presentation, which was excellent, that the revival has taken place. So Europe is looking strong and revived from the performance point of view. But how is it from the investment point of view? Are you seeing that the revival has been complete, or are there specific segments of the market, for example, luxury or mid-scale, or specific destinations that are doing better than others? Maybe we start with Greece.
Thank you, first of all. Thanks for the invitation, and thanks for the, I think, putting an amazing panel today. We have a great discussion, and especially with the pre-discussion we had before. I agree, it's changing. I mean, obviously Greece has been through a rough time the last 5 or 10 years, so it was essential to change. So the product is changing, the market is changing. For us, we see a turn towards the more luxury and more kind of affluent tourism that's coming to Greece, because going away from the family-owned hotels and going away from that model and having more branded hotels coming in and more resort type of hotels, we see definitely a change. Going from Athens to the Riviera now is changing. You can see resort type of hotels within Athens as well. There's more and more investors that are looking to come in and capitalize on that potential, with all the incentives that Greece has to offer. But I mean, you guys are more experts on the issue, but I think Europe as a whole, you can see from the presentation, there are more investors coming from the US and more money flowing in, and from the Emirates and the Middle East, that they're looking to capitalize on that. There's definitely a change, and I think having what Europe has to offer with the stability side, I think it's a great opportunity for the investors.
Yeah, I would absolutely echo that based on the question that we got earlier, that has there been less investment coming in here? I think there is certainly more investment going out from here now as a result of the further turbulence in the region. Benjamin, you've got a lot of investments in the southern parts of Europe, which we saw earlier from the performance point of view. Spain, Greece, both are RevPAR up 15%. What's your temperature check on it? How is the market doing?
I mean, maybe just to add to what you just said, I think we're almost in a perfect storm where we see performance really outperforming our expectations, and we have to revise up our budgets and our expectations for the coming years, especially for those of us that have positioned themselves in kind of the luxury lifestyle market. At the same time, there's still a ton of disruptions because of various market developments, if that's, you know, still the repercussions of COVID, if that is the refinancing issues because of the interest rate hikes. There's still a huge volume of refinancing that's coming up. Even with rates slightly coming down, there's still going to be a lot of pain. So for us investors, it's just an incredible time to be in the market and to be liquid, because there's opportunity. At the same time, a lot of confidence in where the segments, the lifestyle segment is going.
Yeah, that's one thing. Like Europe has always been attractive, but it's just been so difficult to get in that the barriers of entry have been very high. And for example, for you, Peter, you're based in Germany, but you also have investments now increasingly in other regions in Europe. How do you see these barriers of entry topic? Have they lowered in recent years?
Yeah, I think for foreign investors, they did indeed, because, I mean, of course, we are a German-based company, 12 billion assets under management. Of course, most of our invested money is coming from German institutional money, but this German institutional money is currently a bit reluctant towards real estate. They have a big office allocation. They have a big, let's say, office or business hotel allocation, and they will open up now for leisure, and I would rather call it experience segment, because in Germany, luxury is still a bit more difficult than in other countries. But if you have the let's say, lifestyle experience component in your portfolio, that's very attractive. But given the fact that now, let's say, the German institutional capital is not so dominant, there's a big chance for private equity, foreign capital, Arabian capital, you name it, that follows a bit different strategies and can be slightly alternative in their mind to enter into the market. And I think that's, together with the investment situation that we described before, interest rates, etc., opportunities, that's the perfect moment to invest, let's say, from a cycle.
I also think our industry has changed in the last decade, where before you had large institutions making large institutional deals, and then you had kind of small players, entrepreneurs, families, family offices doing small deals. I think what we've seen in the last decade is large institution investing substantial amounts into expert managers. That's driving this professionalization of, let's say, the mid-sized deal that we haven't seen as much of before.
Define a mid-sized deal in Europe. They big tickets there.
Not really. I mean, when we started out 6 years ago, we did, I would say, small deals, 30, 50, 60 key boutique hotels. And we're talking like single-digit millions in equity to teens, right? I would say mid-size is like anything between 20 to 50 mil. These tickets are too small for a large institution to do on their own, right? They need to deploy 100 million, 150 million a ticket. Yeah. So it's not a very competitive space if you're an expert in a given market. You mentioned for us, it's Southern Europe. Where we got started. We started in Portugal, in Lisbon, Mallorca, Milano, markets where we thought there was this tailwind upwards trajectory from a lifestyle perspective. You can pick up properties there for these kind of mid-sized tickets that are completely overlooked by large pension funds, sovereign wealth funds, and the very large American money managers. And that's kind of where we got our opportunity started, and I think that opportunity is well and alive, right?
Yeah. And I want to ask something from Peter, and I'll come to you then on Greece. Peter, it's interesting for me that Art Invest was very active in Germany, and it was very much known as the DACH market, which is sort of the Germany, Switzerland, Austria region. But you've now started, you're in the UK, you're going in the south, in Italy, I believe also to Sweden. So what's driving this diversification in terms of markets?
Yeah, I mean, first of all, it's our industry. The hospitality industry can be more international than just focusing on the DACH region. While we have also a big office portfolio, which is mostly in Germany. We then went into London, bought a couple of sites there. And one of our specialties is also to bring like new brands into new markets. So we did the first 25 hours in Italy, in Florence. And actually that was brought us by 25 hours that we knew from before. So why not taking a new brand that you know and that you know from the market that fits to a market like Florence that probably was a bit understaffed with lifestyle properties. Now it's different after 5 years. And then we built up a team there from scratch and developed a 100 million property in downtown Florence. And then at the end delivered it to Invesco. So actually we are opportunistic, looking for things that we can combine them probably with partners. And then I think it's possible to also step into new markets once they provide the good fundamentals. We wouldn't go for offices to Italy. We wouldn't go for offices to Spain, but we just opened up a branch in Stockholm, and I think it's very important to be where your projects are. And by heart, we are still also project developers, and the project developer needs to be close to its projects, right?
Yeah, perfect. And then Marinos, how about for Greece? It's if we look at the past couple of years, we obviously saw a really strong revival in the southern Europe, and it's interesting because in the past the investors were always asking, do you have something in Paris, Geneva, London? It used to be those key gateway cities, and now it's, do you have something on the islands of Greece? What do you think is driving this enormous investor interest towards Greece, and is it more directed towards Athens or other cities, or do you see that more in the resort space?
Well, all around Greece, but it's going to pick up what Benjamin said before, that you got the small boutique hotels that used to be like family-owned before, and now you have potential investors coming in with money. They can actually change. I've heard the presentation before with the revenue per square meter. You can actually now come in and invest some money into the property and increase the number of rooms or changing completely. So I think that's something that investors are really drawn into. And coming back from the crisis, having now a stable government that actually giving incentives to the investors, actually giving incentives to more to the sustainability and ESG side, I think that's what's kind of driving the investors in Greece, apart from the product itself. We see a turn from the family-owned hotels to more branded, as I mentioned before, but it's along with the infrastructure, with the airports that Greece is currently trying and rebuild with the higher capacity transportation with the boats and the ferries and everything that the network is building. I think there's not a specific area where you can pinpoint the investor interest. It's all around Greece. You got northern Greece, we hired like new resorts that are currently taking place that enjoy those incentives that I was saying before. You've got small boutiques hotel in the islands. It's actually finding the location that's suitable as an investor to potentially invest into. The only thing that has changed as well is the Athens has now become a destination on its own. You see kind of the mid-scale weekendy type hotels that investors are looking to actually own and stay in the center of Athens.
So let's talk a little bit about this. How do you create the value in those deals? So when we look at Europe and when we look at the mature markets, very often you're looking at repositioning, redevelopment, or repurposing of an existing building. We have at the moment a client here from the UAE who has just purchased an old hotel in the Alps, and we are going through the redevelopment of that. It's a very typical entry way for the Middle Eastern capital. How do you go about creating the value in that? Is it about bringing the brand in, or how do you create the value from it?
I can just. I mean,
this
is where I get really excited.
Yeah.
So I think for all us investors, right, it starts with buying well, right? If you overpay on day one, you're in pain for the remainder of the investment cycle, and that's kind of where it starts. Today, you can do a lot of investments where you essentially buy well below market price because you're solving a problem on the credit side. You're taking on a liability that the other party can't handle anymore. That's a huge market that just didn't exist before when money was free, right? And you saw the graph before. It's not that long ago where you could just refinance and refinance and refinance, and that window has closed. And as long as that window stays closed, the opportunity to buy well existing properties, I think, is there. And the second is we think on an everyday basis about how can we reposition with what partner or with what brand for which audience, and I think that's where then the magic happens. This is where you can really unlock the value of a location. And Europe has so many stories to tell and has so much storytelling opportunity, I think, for the creative teams to develop new concepts, new positionings is, it's an enormous opportunity, and every single deal is nuanced and is individual, and so I don't think you can overgeneralize on that. But of course, everything that we hear at this conference, food and beverage, public spaces, co-working, connecting with the local community, modern brands that really connect with the international traveler, kind of not using the same recipe over and over again. all of these things contribute. And I think that the key learning here for us is that whereas before Europe was a core plus investment market predominantly, today if you talk to anybody that is an institutional sovereign wealth or pension fund investor, they are all looking for the value add deal in Europe because they do exist, and I think investors like us can originate them now a lot more frequent, a lot easier than in the past.
If I might add on that, most of those assets obviously have a big legacy, right? So you have big 4-star hotels that have building age 70s, 80s, probably the same brand since 30 or 40 years. Now that contract comes to an expiry, and of course the brand can add value, and of course that's a very exciting play field for all of us. You mentioned, and I think Larissa mentioned before also the shift from RevPAR increase also to RevPAR per square meter increase, because that buildings at that time have been built with much less efficiency than they are built now due to the construction cost pressure that we have in Europe. So you have big conference hotels in Germany. You will never be able to construct a new conference hotel currently because it's simply too expensive. So there is that big F&B space, conference space, that can be used in a much more experience-oriented way, lifestyle-oriented way, put probably also some leaner but more focused F&B in there. And then the brand obviously can add a lot of value. The thing is, we have that, let's say, operational cost pressure that we don't have probably in other regions. So the brand also has to come along with a new operating model as well. So I would say yes, but the brand also has to add some operational ideas to it, and not just a distributional positioning.
I give you a very simple, very tactical example. This February, we acquired a property in Sardinia near Porto Cervo in the Costa Smeralda, which we saw the kind of the story of Sardinia being rediscovered as a lifestyle destination, new type of tourists coming, and so on and so forth. We spent 4 months doing a refurbishment, like rapid speed refurbishment of the rooms, ripped everything out. Our design team already had everything ready to go. We opened in mid-May with completely new marketing, and the RevPAR increased about 100% year over year, right? With 4 months development. These type of things, which are, I would say, atypical to the European story, which, as you say, normally you always look at Europe and say, okay, city center hotel, Paris, London, Milano, etc. I think there's so many destinations, Greece, Balearic Islands, Sardinia, etc., where you have these tremendous value-add opportunities, and where the consumer is calling for more modern, design-focused lifestyle inventory that simply doesn't exist.
Yeah, there was certainly a lot of that because it's very fragmented in Europe. Then you kind of had a lot of family-owned businesses that went down or suffered severely during the COVID, and then.
And it's also these markets are changing, right? I mean, we're both German. Germans love Mallorca. Just drive through Mallorca. There are so many properties in dire need of repositioning because the consumer simply has changed, and someone has to kind of take that risk and reposition them, and whoever takes that risk will be well compensated for it.
Yeah. What's your strategy then with those assets? When are you going to exit?
So, I mean, we take Mallorca, our Mallorca deal as an example, really crappy 3-star hotel in a kind of underdeveloped part of the island, but 10 minutes to Port Andrax, right? 20 minutes to Palma. So we saw it's a great location, but it needs some love. We acquired it at auction, well under value. We now ripped it apart and did a full gut renovation. It will launch now as a 5-star hotel and this is again kind of to the story. I think we underwrote it initially with a 350 euro rate. We're looking at it now opening next year with a 700 euro rate. So the tailwind is there, right, for Mallorca as an example.
You also benefit from the Americans flying in now directly to Palma.
Exactly. So there's different segments that are coming in, and our thesis is we like running these assets, and we exit when we feel like it's the right time. We're under no pressure, but we of course like to, once we see stabilized P&L, then partner with a larger institution to run them for the long term.
Yeah. Take Benjamin's details maybe after the session in case you're looking for later entry to Europe. Marinos, how is it for you with Greece? What sort of investors are knocking on your doors or are wishing to enter Greece?
Well, first of all, what you just said before, like you're looking from a small boutique kind of to chains and go from the 3-star to the 5-star. You've got the big resort types, you've got the big brand names coming in, massive properties. Like basically, as I said before, the product is changing. Greece is becoming an all-year-round destination now. Like the numbers are going, every year stronger. We had 33 million this year, 23 now, 24 is expected something like that. The revenue alone from tourism around 21 billion in Greece. So it's up for the Greek state to actually create an environment that investors can come and kind of take advantage of all the opportunities that are right there. You need, of course, someone on foot. As you said, you need to drive around on the islands or the mainland and to be able to find those opportunities because they can be from a small boutique type place to a big plot of land that can change with a mixed use, have villas, because we're actually trying to change the legal framework as well to be able to make it easier for an investor to do those type of changes. Some of that can be done through Enterprise Greece as well, if you can, because we're official government state and we've got specific incentives for bigger investments, what we like to call strategic investments, from fast track, tax incentives, and a special dedicated spatial tool, you can get better builder coefficient. So all of this together can come and kind of create more value for an investor, not just kind of an opportunity because it was cheap, but from what you can create, you can change later on. Because I think there are no real low valuations right now in Greece, but there are many opportunities there to be able to change, to do exactly what you did in Mallorca. And
Just too hot. It's too hot.
Depends on when you come.
It's like basically
it's cooler than here.
No, I mean it's the market is too hot. It's like everybody knows about it, right? And so this makes it harder, I think, for all of those that invested into Mykonos 5, 6, 7 years ago.
There is a huge variety in Greece. You have so many islands. You can go every.
It's not about what's the next island. That's what we have to talk later. What's the next island?
I paid them before, by the way, to talk really good about Greece.
Excellent. All right, so I'm going to open it in a second for the floor and for questions. And in the meanwhile, I want to ask, though, there's a lot of people in the Middle East that they are looking to enter into Europe with investments. And what I hear from them again and again, still today, is that they don't find those opportunities. So leave alone good opportunities, but they don't even hear about it. So how do you come across these great deals that you talk about?
Call me.
Okay.
Call me.
All right.
No, I mean, so I think the reality is that it was really hard, and it is hard, right? The origination process in Europe is really, really hard, and we have teams in 5 different countries. We have over 50 family offices invested in Europe that share with us their deal flow, and it's still hard, right? But what I would say, I can't even imagine how it is for, let's say, an American firm or even a London-based firm that doesn't have feet on the ground in those markets to originate really good deals. So when we are not local in a market, we partner with someone else, right? So if we would start to invest hundreds of millions into Greece, I would want to partner with a local partner. If our partners from the Middle East, they partner with us because they know we have the deal flow in those markets. And I would love to co-invest with you in Germany because I know you probably get the best deals, right? So I think the real answer is you need to partner with folks that have feet on the ground.
Yeah, and we built up a portfolio of 12 billion in assets in 10 years, over a decade, and this wouldn't be possible without partnering, right? So I think there's a good professional landscape in Germany of setting up joint ventures. And I would totally agree that is key to look for a local partner, an operating partner, a construction partner, whatever you name it, because you will never be able to cover all tasks. But then again, I mean, you can see that from our let's say balance sheet. It's possible to execute and generate deals once you have a good reputation. You have a stable, solid performance year on year. And this year we are most likely buying, selling, and developing assets. So, and then people turn back to come to you, and then you will always make your deals. It's not as hard as you would describe it, I would say.
Just call them, call me, or call Marinos if you want to go to
Yes,
Greece.
exactly. It's what we like to call matchmaking. I think it's just, come to us, Greece in particular, and as the official government agency, we can connect you, and bring you with every local partner I have investors to talk to you right now, after that. But yeah, it's that matchmaking that it's important and key for the investor to feel comfortable and to find local partners and maximize the returns.
And this is, of course, where it all happens at the Future Hospitality Summit. Does anyone have burning questions at this point to the panelists? No, I'm going to carry on. Where's the next hotspot? If Greece has been and currently is one of the hottest, where's your eyes going next?
I think this probably goes with the flow of the panel, but I think rediscovering really mature markets is what I'm really excited about right now. I would say Mallorca is one of those examples. It's a very well understood tourism market, but rediscovering it for new audiences is very exciting. We're doing our first deal in Munich, right, which was a very, very kind of low yield, very core plus market for the longest time. There's great deals to be done now. I think there's more and more opportunities coming in very mature markets that have been overlooked by value add for quite some time, and that's I think where a lot of money can be deployed very effectively.
I would generalize it to destinations that cover both the business and the leisure segment. So that will be our focus, at least. We will not do like what we did before, probably a typical trade fair hotel or a city center office CBD hotel. I think today you have to really focus on a 7-day per week seasonality, and that could also apply on the leisure destination. So we are trying to set up a new leisure fund vehicle where we really focus on destinations that have a majority of leisure demand, but that can only be city centers as well. So I think that is a main character of a destination, as well as seasonality. So I think even Austria and Switzerland can see a lot of new investments going in because of that, let's say, existing structure, the family operations, and that's where we see a lot of deals are originating currently. Families that operate their resorts, trying to put them for the next generation.
And maybe just to add to that, an area that we're putting north of 100 million into is not just the real estate, but the actual operators. So we're incubating and building and investing into operating teams to build those new brands and build these new concepts to bring in that new type of tourist. And I think that's something where we're extremely excited about, to build up this next generation of brands, because as we know, if you turn around and kind of walk through these halls, there's a lot of legacy brands that have done very, very well for themselves for the last 20 years. And I think there's a big opportunity to look at what is the next generation of brands going to look like. And so we're putting significant capital into that segment as well.
But we should also transfer that question to the airline industry, because we could see from Mallorca what effect it has if suddenly they open up flights directly from New York and Miami. Also for Greece, seasonality, I think if the heat in summer is so hot, you can easily extend the season to November, December probably, and start in March.
Definitely, the more flights.
But you need the flights.
Yeah,
so
sure.
that is something very important as well.
What about then the key gateway cities? Like let's say still for the Middle East, London, Paris, Milan, Rome, Geneva. That's where still a lot of the players want to be. And we saw, for example, Dubai Holding managed to acquire the Richemont in Geneva. It's going to be branded as Jumeirah in a few years' time, maybe next year. So it's are these, how viable is it to source these sort of deals?
Very. I mean, if you can originate, I think London is a great example, right? I mean, London is very active right now, and I think if you can find the right deal, London will be London, and Berlin will be Berlin, and Munich will be Munich, and we just made an investment into Madrid, which I think is a phenomenal city on the rise right now, and is as you said, it's just a no-brainer. If you have the right strategy for it and you can originate the right deal, these deals will never go away. Which I think is new, is these pure leisure deals in Sardinia, in Corsica, in Ibiza, really becoming an institutional product.
Yeah.
That is relatively new, and we're big believers in that as well. Because again, even Mallorca, it's not really just leisure, right? I mean, you see a lot of business travel to it. You see people working from anywhere. And you know, we're opening Mallorca in May of next year, and we plan to not close it ever again, right? It's going to be a 365 product. That's completely new.
Just to add, just exactly that you're changing it. You see a changing lifestyle. You've got working remote. You've got people coming to retire to Greece, to Spain, wherever. So it's up to you or the country or whatever to grab them and just change the product and change what you have to offer. You know, that's what it is.
Destination marketing, and that's Dubai is on the forefront of it. How well they did the destination marketing, right? Yeah. And that's probably also where some of the European destinations can improve. Learn, because they sometimes don't have that destination marketing focus. In Germany, Hamburg is on the forefront. They're doing the best destination marketing. Berlin is probably a bit back, right? Yes. They don't promote the city, although it has so much to offer. Yeah. But there is a lot of potential to see that as an investor. The good thing is you can underwrite the cash flows very easy. You have such a long legacy, and you have such a big market transparency, so that there is a limited volatility, I would say.
So let's see, do we have any questions from the audience? We do, Larissa, let's go for it.
Mike? Yes, perfect. Actually, I had a question following what you were saying on sort of, focusing on the revenue per square meter. But then, Benjamin, you already jumped in. My question was, how important are our concepts and brands in this in this context? Obviously, when you look at the changed behaviors and how are you going to respond to that from an operational point of view. But I'll add to that. So we've also seen quite a bit of private equity and more opportunistic capital going into luxury, which traditionally had been more of an asset class, you know, for the sovereign wealth funds and very low return. Is this a segment, luxury, you're also focusing on, and what are then the key success factors in getting opportunistic returns in luxury?
If I may answer that from just a very concrete local project, we are under us here now, so it's probably a bit confidential, but just to illustrate that question, we are currently developing a Hoxt hotel in the city center of Hamburg, prime AAA location. We tried a lot of brands there from really the ultra luxury segment, but they didn't work. Although Hamburg is very attractive and also luxury, but we at the end focused on an experience brand from Ennismore, and we will develop two F&B concepts there. One, a Turkish restaurant, and a Portuguese rooftop restaurant, fish restaurant with facing the Elbphilharmonie. And that is basically the outcome of the question that you asked. It's not so much the luxury, it's a lifestyle or experience segment, and then it's really a focused F&B concept, like a Turkish restaurant in the AAA location at Hamburg Alter Wall, something that you wouldn't expect directly, but it's a result of a focused market analysis from Ennismore. Yeah. And that is, let's say, our approach.
Yeah. Thank you. Okay.
Just one last point, because I think the use of square meterage in buildings is really, really key. And you know, we, for instance, did a number of deals. For instance, our hotel in Lisbon, where I think 10 other hotel brands and investors passed on it because they were like, well, there's so much public space. What are we going to do with it? We're launching it as a member club, and we have over 2,000 square meters of amazing F&B facilities and member club facilities, and have to do a lot of work and investment to kind of get that concept going. But it requires that hard work to really program every single corner of the building to make it viable. And I think these new lifestyle brands that basically bring in their audience, and if it's co-working, if it's membership, if it's F&B, bar, cocktails, I think that's the answer to a lot of how do we get the highest RevPAR, the highest revenue per square meter out of each building.
Okay, so final question for each of you, and I'd like to get a one-sentence answer on this. If there's someone in the audience who is looking to invest into Europe, in your case Greece, what would be the one piece of advice that you would give to them?
Come to us. Come to Enterprise Greece.
Okay.
My advice would probably be to invest into a diversified portfolio and not to try to do the direct co-invest into an individual deal or buy an individual hotel. I think that's something that in this region, we have a lot of investors from here, and we hear that a lot. It's like, oh, we want to find with you the perfect deal and then do that deal. And we're the largest investor in our own fund with hundreds of millions of partner capital invested. So we like the diversification as much as our LPs do. And I think my piece of advice would always be diversification.
Diversify. Okay, what about Peter?
Look at the demand drivers.
Okay. Local partner maybe, partnering with one of you as well?
Always.
There we go. Great. Okay, thank you very much. That was a very interesting session, and I'm sure that you will be available here later on if someone has any follow-up questions to get in touch with you. Thank you.
Thank you.